Thanks for clicking. We had another interesting week in China's property crisis this week, with Evergrande receiving a 1 cent valuation on its shares from one of its creditors. We also received news of further bailouts coming from Beijing, in addition to the ones mentioned last week. Beijing is attempting to halt the freefall of its real estate sector, as hundreds of thousands of middle-class Chinese continue to boycott their mortgage payments until the construction of their homes is completed.
It's the least I could do.
Though it's not yet clear that the market is responding to Beijing's attempt to stabilize the real estate sector, as we found out this week that a number of Western investment firms are pulling out of China at a growing pace. So what I want to do today is go over Evergrande, take a look at Beijing's attempt to bail out these real estate firms and home buyers waiting for their homes to be completed, and then take a look at those investment firms leaving China. With China being Canada's second largest trading partner, what happens there will have ripple effects here. As such, we'll continue to have updates out on China's real estate crisis on this channel every Friday. If you want to get those updates, make sure you click, like, and subscribe. But for now, let's get into Evergrande. As mentioned, one of Evergrande's creditors, Huan Fund, downgraded its valuation of Evergrande shares to 1 cent this week. While this initially seems like an interesting anecdote for one of China's largest real estate developers, it serves as a reminder that we still don't have a true valuation for Evergrande's shares, as the developer has been suspended from the Hong Kong Stock Exchange since March of this year, after it failed to provide audited financial statements. At the time that Evergrande was suspended from the Hong Kong Stock Exchange nearly 5 months ago, its shares were worth 1.65 Hong Kong dollars, and has since fallen to 1 cent as of this valuation. And it's not just Evergrande. Share valuations in Shimao and Sunac were also slashed this week. Well, bad news for Evergrande is definitely not anything new.
Go ahead, joke all you like, but
China announced this week that they would be providing more bailout money for the troubled real estate sector. If you'll remember, we talked last week about China's state-backed insurance company guaranteeing the bonds of a select group of real estate developers. This week it was announced that the state was getting directly involved in this crisis. The People's Bank of China, the PBOC, and the Ministry of Finance announced that they would be providing $29 billion in loans for developers that have sold but unfinished projects. So these loans are a direct attempt by the central bank to get these projects finished in an attempt to quell the mortgage boycotts that have been brewing for well over a month.
This is essentially a backstop right now. This is to boost confidence and so homes that have not been delivered, that are projects that are in disarray and cannot be completed, they can be completed. So there's a societal element to it as well.
Further, what we talked about last week, China cut their short-term liquidity rate. This week, they cut mortgage rates. They cut their 5-year prime rate by 15 basis points, the largest cut since 2019, even with guaranteeing the debts of some troubled firms and providing direct financing to other firms. It's not clear that Beijing has quelled the worry of international investors, as it was announced this week that some investors like UBS, BlackRock, HSBC have been pulling out of China, reducing their holdings of the Chinese property market. BlackRock itself halved its positions in China's real estate market in June and subsequently realized double-digit losses in July. As such, China's vice premier this week made a rare pitch to international investors, noting it was necessary to make great effort to attract new foreign investment. And this is definitely a sign of how serious Beijing is taking this property market, is taking this slowing economy. While 30 years ago it would have been commonplace for a Chinese official to make a pitch to foreign investors, you don't really expect to see the state getting involved to such an extent from the world's second largest economy.
I should not have to be coming here, hat in my hand.
So Beijing is moving increasingly towards bailing out these real estate developers, not only guaranteeing the loans, but now providing direct financing from its central bank. Thus far, Beijing says this is an attempt to get homes built to help quell the mortgage boycotts, but time will tell if it continues to the wider sector. Fitch ratings agency released a report this week saying that while the moves by Beijing to bail out the real estate sector to get these homes built may help with social stability, the moves have not been enough to revive the property sector, which, as we've seen, is continuing its downward trend. I would think that Beijing is going to get more and more involved in this crisis as time goes on, as many of their half-hearted moves have yet to work thus far. We'll continue to have updates out on Beijing's attempt to revive the real estate sector and to revive its economy on this channel every Friday. If you want to get those updates, make sure you click like and subscribe. But for now, thanks so much for watching.